Meta Platforms, front and center. We have a preview for you. This is our morning trade, and Caroline Woods is here. She's taking a look at Meta, a name we want to know more about.
Yes, Meta will report today after the bell. Shares under pressure ahead of that report, although not limited to Meta. We're seeing weakness across the board for the Mag 7. Meta shares are down about 28% from the highs reached in February. At one point, it seemed unstoppable, but it's definitely faced quite a bit of pressure the past couple of months. It's down about 9% year to date, although it's still the second best performing Mag 7 stock this year, so far this year, behind Microsoft, which just really shows you the weakness that we've been seeing with these big tech stocks. In terms of the numbers that we're looking for tonight, adjusted EPS of $5.22 on revenue of $41.22 billion. So that would represent 13% year over year growth. We'll want to find out how much time Meta's nearly 3.5 billion daily active users are spending across their platforms. Ad spending is always key for Meta. We saw Snap recently withdraw its financial forecast, citing a slowdown in ad spending. We'll see what Meta has to say on that front. We want to know how reduced ad spending by Chinese companies like Shein and Temu have impacted their bottom line. And of course, investors will want to hear about the impact from Meta's AI investments. They said that they're going to spend $65 billion on expanding AI infrastructure this year. How is that contributing to growth? What's the progress on the Llama 4 models? Also, they're starting this standalone AI intelligence app, Meta AI, that will compete with the ChatGPTs and Geminis and Groks of the world. Of course, had LlamaCon yesterday, its first AI developers conference, so some headlines already coming out of that. Back in January, CEO Mark Zuckerberg predicted that more than 1 billion people will use a personalized AI assistant sometime this year, and he said he expects Meta AI to be that leading assistant. So we'll see, just in terms of progress on that front. As far as outlook goes, always key, but especially key this time around, because analysts have pointed out that Q1 wouldn't have been impacted by the tariffs yet, but Q2 is where they could start feeling that impact. Analysts looking for Meta to guide of about $43.3 billion in revenue for the current quarter. That would represent about 11% year over year growth. I will say, I mentioned analysts largely bullish heading into this report. We've seen multiple reiterate buy ratings or overweight ratings. We just recently saw Bank of America reiterate Meta as a buy, saying given constructive checks and modest 4-point deceleration in YouTube growth, we think the high end of Meta's Q1 revenue guide is achievable. So I think that, there's still a lot of bullishness on the street, despite the fact that shares have been under so much pressure right now. As I said, down about call it 8.5% year to date, but if you take a look, off about 28% from those highs reached earlier this year.
Those AI agents, pretty exciting, a change in our lifestyle, I'm sure, as people, as you mentioned, so many folks will be using those. One of the conversations we had about Snap was ad spend. So while maybe these names are not directly tariff related because they're not moving goods and things, they're still related in that companies that advertise may have fewer advertising dollars. AI, as far as the AI revolution, most folks still think we're in the they don't think we're at the end of the AI revolution.
Not.
But that's another element, and the regulation that they face, particularly from the EU and others. A lot of scrutiny on a name like Meta, but a darling, no doubt.
Sure. I think that, Meta isn't immune to the uncertainty on the macro front because of the impact on ad dollars, but also the uncertainty caused by this trade war with China, given the fact that, as I said, Temu and Shein, contributed to that ad spending, and they're pulling back now. So we'll see what sort of hit that could take based on commentary from Mark Zuckerberg, and also based on that Q2 guidance where analysts think that it will actually start to show the impact of that pullback. As for the AI agents, we keep hearing that they're going to change our lives. I use ChatGPT all the time. I don't feel like it's life-changing yet. I'm really ready for that assistant, the AI agent, to make life easier. I haven't really found that yet from any of the platforms that I've used.
Yeah, I heard a conversation today about ChatGPT and trying to investigate a vacation, for example, what to bring, how to book it, etc. When does ChatGPT actually serve as your agent and book the whole trip for you? Not yet, exactly. All right, Caroline Woods, great to see you. Meta in focus at 536, year to date down 8%. Scott Bauer, CEO of Prosper Trading Academy, is with us, and you have an example trade on Meta for us today. Good morning, Scott.
Good morning, Nicole. And yes, when I look at this stock, if we could just close our eyes, have that crystal ball and say, you know what, I'm going to hold a position for the next 3 months, 6 months, 9 months, I certainly would be bullish. I certainly want to be long it. But we're talking about a trade for earnings, and it's a complete crapshoot what they may say tomorrow. It really is. And technically, we're not in an area either that really resonates with me in saying, oh, we're at some big technical support or big technical resistance. So when I get into a situation like that, for me, the most opportune way to play an option position for that is typically if volatility is elevated, as it is right now going into earnings, I want to sell an iron condor. What that means is I'm selling both a downside put spread and I'm selling an upside call spread. So what I'm doing is I'm going out to next week's expiration, not this week, but next week's expiration. I'm going to sell the 490, 480 put spread on the downside. I'm going to sell the 580, 590 call spread on the upside. I can get about a $4 credit for that. That's pretty hefty credit. And in 9 days trading time, so by the end of next Friday, the range for my break even on the downside would be 486. On the upside would be 584. So I'm giving myself about that $100 range, about 20% of the stock or so, to say, okay, if it trades outside of that, I'll deal with it. I'll manage the position. If it really explodes one way or the other, downside or upside, the reason I do this using spreads on both sides is just to protect my risk and know what my risk is going into a trade like this.
Right, understood. So thank you for that example trade on Meta, and we're waiting on that after the bell today. We'll have Meta, Microsoft tomorrow, Amazon and Apple, and so many other names, Scott. I know you're following them all. A lot to follow this week. So it looks like we're clocking in a losing month again. January was the last time our stocks were higher for the month. So February, March, April look like down months on Wall Street. That being said, we've gotten in some prints this morning. The PCE certainly always an important one. GDP, ADP. Which prints stand out to you? What do they tell you?
Yeah, I think the big one to me is GDP, at least from what we saw today. And that revision keeps going lower and lower. Yesterday, we saw the Atlanta Fed GDP now come out and lower again their expectations from a negative 2.4 to negative 2.7 for the first quarter. So I think what that tells us is we have not seen really the effects of tariffs yet. We don't know how much the effect is really going to be because we don't know what the tariff policy really is. But what that says is there is still so much incredible uncertainty into this marketplace. I even think that this Friday's jobs report, as consequential as the monthly jobs report, typically is, I think that's going to take a backseat to just the news flow of tariffs. So, I can't predict what the next news announcement is going to be, but the market certainly is hinging on every announcement about tariffs that comes out.
With PCE, the year-over-year 2.3%, core 2.6%, and a revision actually in the prior period was a little higher, but overall, getting closer to the 2% that the Fed wants. PCE stand out to you in any way?
It did, but again, I hate to say this, but it does with a caveat. It does with the caveat of the impact from what we've already seen with tariffs is not really factored into that number yet. So until we see that next month and we get the one in June, then we really won't know what that impact is. So sure, it's a really good number. It's trending the right way, but there's too many what ifs, in my opinion, that go along with that to say, wow, we're really moving in the right direction here.
All right, Scott Bauer, great to see you. CEO, Prosper Trading Academy. Thank you so much. Great to see you.